here to tell you about one of the most exciting and fastest growing areas in kind of tax management for assets around philanthropy, which is donor advised funds. And so it's exciting to be here, and I appreciate you taking the time to listen. Just as was mentioned, I'm the co-founder and CEO of DAFI, the Donor Advised Fund for You. It turns out when you let an engineer make the name for the company, it always ends up kind of like that, so apologize. But I have a long tech career. Some of you may know that. Companies like Apple, eBay, LinkedIn, Dropbox. Some of you know me as the former CEO of Wealthfront, and of course Acorns. And as it was mentioned, I also teach at Stanford. And I'm a very active technology investor. I've invested in more than 140 companies, some of which are very, very well known. And so I like to think that I have a good eye for upcoming trends, et cetera. And so 10 years ago, we were talking about automated advice and what technology and AI might do for advice over the next 10 or 20 years. And now I'm talking to you about donor advised funds because we're seeing phenomenal growth. The truth is almost everyone is talking about DAFs right now if you read about it. There's articles in almost every journal, whether it's specific for the advisory community or just for retail customers. This is a hot area and more people are learning about it, which is not totally surprising. The numbers are phenomenal. I mean, the last 5 years alone, the number of donor advised fund accounts in the US has more than doubled. It's growing at more than 25% year over year. And it's not really surprising when you get to the heart of why. It turns out that Americans, in general, are very generous. And most households care about giving. They care about philanthropy. They care about organizations in their community, ones that are nationwide and even globally. And so about 49.6% of American households give to charity every year. There's over 230 billion in these accounts as of 2022. It's already passed a $250 billion at this point. And there's more than $1 trillion in asset growth expected in the next decade. Now, as funny as it might seem, part of the reason that I started DAFI is because as big as the donor advised fund category is, and as big as giving is, we actually think it's going to be a lot bigger. Because when we did our research, what we discovered is that most Americans care about giving, but they're busy. They're busy with work, they're busy with their families, they're busy with their social lives, et cetera. And so they actually don't get around to give as much as they want to. And they feel bad about it. And so what we tried to build with DAFI was a platform that takes all those great innovations we've seen in the last 10 or 15 years, all those great apps and services that help people spend better, save better, invest better, and we tried to build a platform that helps people give better. And we think we can unlock another $1 trillion in giving over the next decade if we're successful. Listen, history, doesn't really repeat, but it does rhyme a lot. We've seen this movie before. Tax-advantaged accounts are a big deal. Almost 50 years ago, we saw the IRA and the 401k break into the market. Now we're talking about categories that have $8 to $10 trillion each. 529s launched about 20 years ago, almost 25 years ago at this point, seeing hundreds of billions of dollars flow into those accounts. And so it's not surprising to us that we're seeing more and more activity around this tax-advantaged account, the donor advised fund. Most people don't know what a donor advised fund is. I know in this crowd most of you do, but if you don't feel bad about it, because the truth is, unless you have a very talented wealth manager or financial advisor, you probably haven't heard of it. But a donor advised fund is basically the perfect account for putting money aside for charity. Right? Step one, you can put money or assets into the account and you get an immediate tax deduction this year against income when you put the assets in the account. The accounts have investment options, some more than others, but your money is invested tax-free for as long as you want it to compound. And then any time you want to give money to an operating charity, it could just be a few clicks, and that money gets sent off and taken care of for you. And it's not surprising that even at the very high end, a lot of people are thinking about, do I really need to set up a foundation? Do I really need to set up a trust? I can just use a donor advised fund to handle the philanthropy needs, the back end and the back office for my clients. The donor advised fund does have a lot of advantages. I don't have time to go through all of them here. The biggest one, like I mentioned, are the tax advantages. So not only do you get that immediate tax deduction when you put money or assets into the account, but if you put assets into the account, it's the same tax advantages that you get when you donate stock, mutual funds, ETFs, even crypto, right? If you donate assets that you've held more than a year, you get the full market value of that security when you make the donation, and you never pay the capital gains taxes. I mean, I'm the guy who was talking for the last decade about tax loss harvesting and direct indexing, et cetera. The tax alpha from using a giving account properly is phenomenal. And that tax-free growth is just an added benefit, right? Having that compounding work, potentially for decades. And it's really great for variable income. A lot of advisors have clients whose income isn't straight every year. They have windfall events, they have good years, bad years, bonuses, they run small businesses. If you have variable income, putting money aside for charity in the years where your tax rates are the highest is a very smart thing to do. And it also, your clients will thank you because it means they can give to the organizations they support, their kids' school, local church or synagogue, in the years that aren't as strong. And it lets them maintain that legacy and that giving. So I'm going to go through about 3 different real client scenarios that you might find where a donor-advised fund is something you should consider. And then I'm going to wrap it up with some of the features you should be looking for when you're looking for a donor-advised fund for your clients. So first, let's just talk about the simplest one, a windfall. I mean, this year, actually, the markets have been coming back. You probably have some clients who may have had a positive event. Maybe they finally sold part or all of their small business. Maybe they had a stock event. They participated in a tender offer, et cetera. Or maybe they finally just decided to take some wins in crypto. Whatever it is, if you have a windfall, you have a problem because that windfall can happen at any time of the year, right? What if that windfall comes in October, November? You're worried about taxes. That bill is going to come due soon. How do you manage those taxes properly? Well, it turns out giving money to charity is one of the best tax deductions out there. I mean, cash donations can go up to 60% of your AGI, 60%. And if you donate property, it can go up to 30%. But most people are uncomfortable making such a big financial decision like what charity to give that much money to in just a matter of weeks or months. They like to build relationships with organizations over time. That's where the DAF rescues you. You can literally, on a moment's notice, the number of contributions we see in the last week of December is really phenomenal. I'll tell you with crypto, we even see them coming in late at night on December 31st. Right? But fundamentally, if you have a windfall, you can immediately say, hey, put that money, put some of those assets into a donor-advised fund, and take your time evaluating organizations and thinking about who you want to give that money to. Maybe you can put aside money that's good enough to support your giving, not just for 1 year, 5 years, 10 years, build a real legacy for you and your family or for your business. And so this is the most common reason that advisors fall in love with donor-advised funds. But it actually gets better than this. It turns out there are ways you can really save your clients money on taxes. Most people don't realize that giving cash to charities is always disadvantageous from a tax perspective. I mean, if you have any long-term investments whatsoever, it would always be better to give a charity you care about. Appreciated stock, ETF, mutual fund, even crypto, like I said. But what's the problem with that? Well, it turns out there's about 1.7 million or more charities in the US, and only a few thousand of them are set up to take stock or crypto. And by the way, you don't necessarily want to give all of that investment to one organization in 1 year. Maybe you want to spread out those gifts over a few years, or over a decade in perpetuity. Donor-advised funds help you solve this problem. Because if you were the type, let's say you had a client who supported their children's school, maybe some local organizations, maybe a church or synagogue, maybe their alma mater. Let's say they give $30,000 to charity every year. If you can just tell them, instead of taking that cash and giving it to the charity, to actually put the stock in a donor-advised fund, get those tax benefits, then they can give that cash to those charities the same as they always did, but save money on taxes. And here's the kicker for people who care about this stuff. There is no wash sale rule with donations, right? You can donate the shares out of their account to the donor-advised fund that had the lowest cost basis. And then literally a millisecond later, you can take the cash that they would have given to charity and use it instead to replenish their investment account with higher cost basis shares. So you permanently eliminate that tax liability. Once people realize that you can do this, you start looking around and realizing there's all these different functions where you wish you could somehow eliminate that tax liability from low-cost basis shares. And if you have a client who gives to charity regularly, this is a new tool in your tool belt to help them save money and meet their philanthropic goals. Frankly, it frees up more money for them to donate to charity, and so charities love it as well. Now, the third use case gets a little technical, and I did write a piece in Kiplinger's about this last year, but it turns out almost every financial algorithm, every system you have for your clients and their financial wealth can be made better if you incorporate a giving goal into your financial planning. Most good financial planners and advisors talk to their clients about their financial goals, right? They might want to put their kids through college, a house, retirement, legacy. It turns out that philanthropy, giving, is one of the most common financial goals that people have. And more importantly, it's a deeply emotional one. This is not just dollars and cents to people. These are organizations people care about. These are causes they care about. And if you talk to clients, they care about it for their families. They care about their legacy. They're teaching their children, their grandchildren about what they care about. And so incorporating a giving goal into your plan is an easy way to suss out that number and find out how much you could be putting aside into a donor-advised fund. The article I wrote was actually about a simple algorithm that we all use, which is just rebalancing. Right? You have a portfolio. Some assets go up this year. Some other asset classes go down. We all know that it's a little bit unpredictable, although we do our best to try. But fundamentally, you have to rebalance regularly, or else your portfolio gets distorted. Right? A simple 60-40 portfolio, you have a big year like this year, might end up more like 70-30. But it's surprisingly hard to convince clients to diversify properly, especially when you feel like you get that tax drag. And there's truth to that, right? The math is unforgiving. When you sell off that category that grew faster than expected to buy up the one that was lower, right? When you rebalance, that's 70-30 going to 60-40, you usually hit taxes, right? Stocks went up, you have gains, right? This is where a donor-advised fund can actually make rebalancing more tax efficient. What if instead of selling those appreciated shares, you actually donate some of those shares to a donor-advised fund, and then you use the cash that you would have used to rebalance the portfolio to buy up the underrepresented asset in the portfolio? So you're just moving the same amount of money around, but by having a donor-advised fund to capture that tax benefit of those appreciated securities, you just eliminate that liability. And in fact, I ran some numbers. It turns out for a very simple 60-40 portfolio, very standard, plain vanilla assumptions, you can actually free up 57 basis points, over 0.5% of tax alpha, just by using a donor-advised fund when you rebalance. So obviously I'm biased, right? I looked out there. I've always thought, ever since I learned about donor-advised funds more than 15 years ago, I thought this was an amazing financial product. But the truth is, most of the incumbent platforms haven't kept up on the technology front. And what that means is clients start bothering you about doing things with a donor-advised fund instead of making the donations themselves. And so we set out to build a modern donor-advised fund, just using all that great technology from the last 10 to 15 years and putting it around a new donor-advised fund. And so we have modern technology. The website is obviously responsive. We have a native app. We were the first native donor-advised fund fully functional in the App Store when we launched. We support all the different asset types you need, right? Whether it's cash, bank linking, we even support Apple Pay, stocks, ETFs, mutual funds. We support every crypto coin that Coinbase supports for your clients who like crypto. And on the investment side, not only do we have 15 pre-approved portfolios of low-cost ETFs from Vanguard and BlackRock and even providers like Bitwise, but we also have a custom portfolio feature where you can pick amongst 460 different ETFs from some of the best providers out there. You have clients who like Fidelity, we support Fidelity, Schwab, Vanguard, and build any portfolio you want, 100 quintillion options. And yes, I specifically sent quintillion because I'm a nerd and I love saying big numbers. But it's amazing, we support almost every legal charity in the US, and this is the part that most of your clients are going to love the most. We actually don't charge AUM fees, right? That's for advisors. We actually charge a flat fee starting at $3 a month. Family plan is $5 a month, and at the high end, $20 a month flat. Whether that account is $10,000, $100,000, $1 million, $10 million, We have accounts going into the 8 figures now, and it's all for one flat fee. Very predictable. We have built-in support for advisors. You can actually add up to 3 members of your advisory team to your donor advised fund. And when you do that, you give permission to the advisor to actually perform actions on your behalf. So you want to make a contribution, they want you to schedule a donation, whatever you need to do, change the portfolio. The advisors can do that on the account, all permissioned and with good visibility. We even offer APIs so that if you have the tech in-house, you can actually integrate Daffy into your own interface that you use for your clients. Most exciting for the community, and it's been one of our most popular features, is that we built true multi-generational giving. You can add up to 24 family members onto your account. Children, grandchildren, siblings, aunts and uncles. We have some people who add their parents onto the account. And the organizers maintain control over the account, but family members can make recommendations of organizations to give to, just like you do on Amazon or Apple, and then the family can talk about it. My own family is on it. I can tell you the dinner time conversations that I've had from my children when they see us make a donation is just amazing. It touches the heart. It's so hard to talk to families about these things, and having this true integration helps you do it. Lastly, I will say, like I mentioned on the fee structure, you will save your clients potentially thousands of dollars of fees. And over the course of a decade or two, it could be tens of thousands of dollars of fees. We even have a handy calculator built online, so you can put in whatever provider you're using, put in the account, and you'll see how much that you save. It's just very hard to beat a flat rate service like ours. Lastly, we keep innovating. Our donor advised fund platform has features that actually clients are finding very, very exciting and aren't available on the other platforms that feel more like financial accounts. So one of the features we launched last year on Daffy is the ability for any of our members to run a matching campaign for charity over their donor advised fund. Right? It makes sense, right? Online campaigns have been around for decades. Everyone knows how they work. A lot of people like giving money to charity, but instead of writing a check for $25,000 to their kid's school, instead they could run a $25,000 matching campaign and help them fund building a playground or a new science lab or something that's meaningful to them. What we found from our members is that ability to do a matching campaign makes everyone feel better. People feel good being able to give small amounts. It's very personal. And the organizer, the person running the campaign, can pick up to 6 charities to support and let their donors pick amongst them. And then the matching just automatically happens within minutes every time someone makes a donation to the campaign. So they get to feel like they're not just giving to the organization, they're supporting the organization, and they bring new people into the community, which is what the charities really want, is more and more exposure to people who care about their cause. And yes, of course, it's 2024, so all the new features have all this AI goodness to it. If they don't know how to write the campaign, it turns out GPT will help them write the campaign. I'll tell you one last story just because I like the humanity around giving. It's one of the things that makes this area most special for me. One of our Daffy members, for example, ran a $20,000 campaign in memoriam for his wife. And we're actually seeing a lot of memorial campaigns, a lot of retirement campaigns in honor of someone. Not even if they didn't pass away just now. We're seeing campaigns for people who passed away recently, but we're also seeing anniversaries, the 10-year anniversary, the 20-year anniversary. Saw a campaign for someone who had passed away 20 years ago. They were a teacher, raised a scholarship in their name. I mean, these are phenomenal things, and I think you'll find that your clients will appreciate the ability to not just talk about things, but to actually do something. And donor advised funds, if they're set up properly, can help them do this. Anyway, I've been here enough, and I know I'm competing with the food trucks, but I want to let you know you should check out Daffy if you can. It's very simple. It's actually free to get started. We charge nothing if the account's under $100. And given our low fee structure, we're seeing a lot of people who already have donor advised funds move over a few $1,000s or even $10,000. They love the app. They use it as walk-around money for giving. And I'll tell you, it does feel amazing. When you come across, when someone who you care about comes to you and says, hey, there's a cause, I'm raising money for something, the ability to reach in your pocket, pull out your phone, tap, 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 and not only know that you did something right then and there, but you did it in the most tax-efficient way, and that actually you had the money put aside, you don't have to worry about your budget or your goals, it's really liberating. And I think you'll appreciate it, and I think your clients will appreciate it too. Anyway, thank you. Great to see you.